Hello, everyone. This is Andrew. I'm a professional risk manager at a multi-billion-dollar hedge fund. I'm here today mostly because I've been watching a lot of financial and personal finance YouTube, and I am a little disturbed given the current climate of the market, the amount of charlatanism I see in people who provide personal finance advice and advice in investing in the stock market. One thing that everybody always forgets to talk about is what is financial risk, how do you measure it, how do you keep on top of it in your personal portfolios. Now, some of this is a little difficult to do as an individual. Me, in the context of a hedge fund, I have a lot more tools at my disposal, and my traders have a lot more tools at their disposal to properly hedge different risks. At home, I am personally a long-only equity investor, predominantly in the United States, and there are other ways to think about risk. To start, there are kind of two key things I want to touch on. One was last week's crisis, or mini crisis, in the world of Robinhood, the investing app. I am a believer in the small, no or low commission investing apps. I personally have used Robinhood extensively over the past 5 years, starting in early 2015. I also use Webull, a product that I think I personally enjoy better, and I've used several other individual brokerage accounts. Robinhood's problem, of course, was that they were down for about a day and a half of trading during one of the largest run-ups of the Dow, and then the subsequent day. Their response was inadequate. Their compensation of losses was feeble and insignificant. And ultimately, I think that they have severely betrayed the trust that I placed in them. I would say, do I think this issue is going to be pervasive? Maybe not, but there's always a concern when there's any issue of availability and I guess the right way to put it would be any instability in a financial institution. It could lead to an issue where you have a potential run on the bank type scenario. Personally, my response to Robinhood behavior was to initiate a transfer into another brokerage. I'm not necessarily saying that you should do the same, but I would be cautious with how much of your wealth you tie up in their platform, considering that we don't really necessarily know all of the whys and all of the downstream effects of what happened last week. Number two, and that's the big elephant in the room, is the instability in the market over the past 2 weeks. Last week, we had what was seen as the largest single point move in the Dow in history. Today, exceeded that. Now, is this a sky is falling type scenario? Questionable, but at the same token, do I think that means you need to do anything with your portfolio today? The answer to that is an absolute no. Why not? Well, by the time you got to your desk this morning or turned on your terminal, the damage was already done. Most of what happened today was fluctuations around the open, and most of this was a knock-on effect of the real driver here was the move in oil prices over the weekend. Coronavirus is still a big concern. I think our government's ineptitude in responding to this is going to continue to weigh on the indices. But do I think this is going to lead to a unparalleled financial collapse? Not necessarily. A couple of reasons for that. One, this does not imperil some of the key financial institutions behind global capital markets the way that, say, the 2008 crisis did. Number two, there's a lot of panic because there's a lot of misinformation or missing information here. I think once the picture becomes clearer and once people are more certain as to what the outcome can be here, even if that outcome happens to be terrible, I think that financial markets will stabilize on notice of just less volatility, less uncertainty. Right now, we are seeing spikes in volatility because we are seeing massive amounts of uncertainty around the world. We are seeing things that look absolutely terrifying, and it leads people to think irrationally. At this point, please do not touch your portfolio, whatever it sits in. If it is 100% cash, you are probably better off holding that cash. If you are in 100% equities or bonds or what have you, stick with that. The real reason being that someone trying to pump cash in today, I am personally guilty of this, really is trying to catch a falling knife. I have attempted to catch a falling knife before. My general outlook on the market is that in the long run, and I myself am in my mid-30s with quite a bit ahead of me in my personal career and earnings, and quite a bit ahead in run-up of the market, I think that's going to ultimately lead to a situation down the line that prices of assets will be above what I am paying today, and I think all of the investments that I'm making today are long-term concerns. That said, depending on the situation and how things evolve, that may not always be the case with every asset on the market. There could be an increase in defaults and other credit events like that that would put severe strain on your equities or bonds. But really, the bulk of the damage has been done. Anything that you do today, all you are doing is locking in losses. And you have to realize, as hard as it is to do, that 9 times out of 10, when there's a huge exogenous spike downwards like there was today, it is followed immediately by an equal and well, maybe not equal, but an opposite reaction. I would be surprised if there was not a strong rally within the next few days in response to this, as some traders and investors start to believe that the initial reaction to this weekend's oil move was perhaps overblown. So with that, I will be coming back on a periodic basis to talk about different topics in risk and personal finance. I hope that you found this in some way helpful. I hope you'll notice that there is zero production value here. I'm going to say this once and only once to exemplify that I will never say this again. I will never be the one to tell you click like and subscribe and all that. I am not here to make money for me. I am here because I'm a little bit concerned at what information I see widely spread and widely disseminated across the YouTube platform. I want to make sure that people are looking at the current state of the world with very clear eyes, and they're looking at it singly and rationally, and they're looking at it with at the very least, some of the fundamental building blocks that sophisticated investors like the hedge funds that I've supported for the last 10 to 15 years, I want you to kind of know the kind of thoughts that are pervasive in my industry and the kind of tools that you might have in order to improve your investment returns, and at the very least, to sleep a little bit better at night. With that, thank you very much.